All right, next question comes from Joe. You often mention the general rule of not investing money into the stock market that you need in the next 5 years, plus or minus, which I understand to be based on roughly how long the stock market has typically taken to recover after a recession. Is there a similar guideline for bond investing? Assuming I'm investing in a bond fund rather than individual bonds, where I would know the exact maturation date of each investment, is there a rule of thumb for how long I should plan for it to stay in the bond fund? Thanks very much. Bonds!
So he makes the important distinction of if you invest in an individual bond, you invest $1,000 in a 5-year bond, you know in 5 years you'll get that $1,000 back as long as the issuer is still in business. Bond funds go up and down in value, and you don't know what it's going to be worth in the future. And they can lose money, except generally speaking, it's not very much. So when you look at the overall bond market, years whether it's down, we're talking like single digits. Since 1926, the worst year for the overall bond market was in 1969 and was a drop of 8%. So not a big deal. That said, it does depend on the type of bonds you own. And the two important things to consider are interest rate risk and credit risk. Interest rate risk is more important the longer term bonds you have. If you have a long-term bond and interest rates go up, you could see that bond fund go down 10, 15%. And then the other is credit. So if you have high yield bond fund, otherwise known as a junk bond fund, those can go down significantly. Most of those lost more than 20% in 2008. I generally recommend that you kind of stay away from those. So if you're going to go with bond funds, any money you absolutely need in the next year or two is probably better to keep in cash, short-term CDs or something like that, maybe even 3 years. Otherwise, you're fine to have a bond fund. I generally think you should keep it a safer bond fund, investment grade corporates or treasuries, intermediate term, low cost, and you'll be fine.